In today's video, I'm going to talk about building a quantitative edge from the idea to algorithmic strategy. In trading, everyone talks about having an edge, but what does that actually mean? And how do you build one? In this video, I'm going to show you my full process of developing a quantitative edge from the idea generation to research, coding, testing, and finally forward validation. I'm going to talk about volume inertia. The full code is like probably 1000 lines. I'm going to talk about this strategy I developed, explaining how it works, but not in the details because I don't want to share exactly the strategy, just the process. So let's begin. Okay, so I noticed something that was happening over and over with volumes and also price movement. And that's something that you can test with algorithms and see if that's something that generates alpha or it's not. Basically, the logics is around the volumes and what happened over a period of time on those volumes. If you see here, for example, the bearish volumes increase and then the price from around here start to drop, okay? And that's something that you can test. If you see that thing up and over again, you can build a code. So basically, I built my first code on Pine Script because it was the easiest way for me to extract data. And this is not exactly my strategy, of course, because I changed it and also I modified the logic, but not only, also the parameters. And that's because this is not optimized. Those profit and loss are based on the capital. We can do on 100,000 of capital for, let's say, 1% risks fixed, and also pyramid 0.3 like that. Okay, so as you can see from that, we can extract from data, and like on the trade analysis, we can see that we're actually having success. So for example, here we see the win rate for long position and also for short position, and then we can see other parameters. Now the performance seems to be much better. That's it. From the trade analysis, we can see some of the metrics we're looking for. And for example, this is the average win-loss ratio. And also from here, we can see that the overall profit is good, but we can see that all the profit and more, it came from long position and not from short position. So from this little code I made, I noticed that the strategy is working okay, but only on long position. So we can fix that. And then the first process was to research. And you can do research by reading books, read research papers, or maybe like I did it here. After years of experience, you start seeing some patterns in the price. It are recurring over time. You can think about like I did here, and then you can start. Let's begin the phase 2, the development of the strategy. In this case, I'm going to show you the first and basic of MQ5. MQ5 is the code that you can use on MT5, so MetaTrader 5, and it's very simple. Let's say the easiest one is Pine Script because the same algo I showed you before with 1200 lines, on Pine Script was only 60 lines, way easier, but of course not as sophisticated as this one. This is the basic EA, so a simple expert advisor. This is based on moving average crossover, I think. Yes, exactly. Buy if the price is higher than the moving average and sell if the price is lower than moving average. This is the easiest EA ever. I think it's not working, but it's just a way I'm showing you how those concept works. Those are the basic concepts. So we have variables and then we have function groups. The function, then we have the condition, control logic. Like if the price, let's say in the previous example, was greater than the MA or SMA, so we enter, if or else we do something else. And then we have the loops, so the repeat function. Then this is the perfect example. So you have to think about an EA like a robot that can start on and then watch the markets on tick. And what is on tick? Tick is the smallest piece of movement and in time and in price. And the EA, so the algo, is going to be active and update every single tick. So I think that's 2 seconds. And then make decision with if, for, and stops. So now that you saw the basics of the development phase, I'm not going to show you the full code and also the full logics behind, but just the parameters. Now it's in Italian, but it's not a problem. So those are all of the inputs. As you see here, this is the SMA, standard moving average. So those are like basic concepts. When you do the testing and optimization test, that's the third phase, you're going to notice that the simpler it is and the better the performance is going to be. And why that is that? Because you can, if you have too many parameters altogether and you optimize them, you're going to overfit the algorithm. So overfit the algo previous data, and that's not something we're looking for, because we want to be more flexible to new data. If you feed something to old data, the algo is going to be super fitted on those type of data, and if something is going to change, the algo is not going to adapt. Okay, that's the easiest way for me to explain that. Those are some other filters that now, like, I notice after 8 months of using this algo in real data testing, I noticed that all of those parameters are not useful, because pyramiding is like adding position over and over if some other position are open, and it's not something reliable and something that is increasing the performance overall, is decreasing the performance. So all of those parameters, like this is the take profit multiplier, and it's not fixed. This is based on the stop loss length, like 100 pips, like here. Okay, the take profit, if the multiplier is 3, is going to be 300 pips, okay? Because all of those parameters are flexible. You can see this here, input for long ATR. And what that means, the stop loss of my trades are based on the average of the previous 14 bars. So let's say from here, you count back 14 bars, okay, like that. And then the algo with a formula is going to calculate the average and then multiply the average by a number. In this case is 1.8, but it's just for the sample. I optimized that, and I think now is 2 times the ATR. So that's something very flexible, because as you can see here in this type of markets, the stop loss is going to be bigger than the stop loss in some other, let's say, like in ranging markets, in this case where the ATR is very small because the average movement is much lower. It's just to showing you and explain to you that what I'm looking for is to be more flexible And also, I don't want to be fixed on anything. So every type of parameters is based on something that can change over the time. So there is nothing fixed like 100 pips or 1%. Nothing is fixed. So that's an important thing I learned during those 8 months of real testing. And then we have force close on Friday because we don't want to get slippage. This is the start of the logics, let's say. We have also imbalance filter and yeah, trading time. I'm not using this, and also I'm not using the weekly filter, only on Saturday and Sunday, but of course gold is not trading on those days. After the development phase, we have the optimization phase, is to understand how this thing work, and by doing that you're going to start the genetics algorithm where you can test a set of parameters. Let's say I want to test the SMA starting one. The starting, choose the first number, so let's say 10, and then the pass is going to be 10 as well, and then you click start, and the live tester algorithms is going to take your algorithm and then trying all of the possibilities, in this case is 900, and see which one performed well. I'm going to do a really based sample here just to show you the process. I don't like to fit the algorithms on the last day. So today is the 9th of October, and I don't like to optimize the algo until this day, but usually I'm doing, let's say, 1/4. So the testing data is going to be from beginning of 2020 until 2024. Okay, April, yep, May, let's say, because it's 29. I don't want to be overfitted. On the third phase, the optimization and testing, I run historical simulation using out of sample data to see how the model perform. The out of sample in this case is going to be the period. Now this backtest is already finished. This is the result from the set of parameters I made it after, of course, optimization and testing. The out of sample is going to be the period from the end of that till, let's say, today. That's the out of sample. And then you are looking for metrics like Sharpe ratio, like this number here, and then drawdown. Okay, the drawdown, never look this type of drawdown because this is the balance, but you won't look at the maximum drawdown. This is the equity. And then you're going to look at some other metrics. This is the win rate for short position, and this is for long position. And for both of them is actually very good. And then also you're looking for the worst position. This is the average losing position. This is the average winning position, and this is the best winning position. If you look the ratio between the best winning position and the worst one is kind of good because this is like 1 to 3, 3 to 1, and also the average position, that's very good. Even if you have to think about swaps and commission, but for this type of assets, in this case is XAU USD, the commission is around 1 to 2 USD for every single trade. So even in this case, it's going to be profitable. The optimization is delicate. I adjust parameters. I also use walk forward analysis to see if all of the logics are working even with out of sample data. And then on strategy quant, I'm using the Monte Carlo simulation and stress tests. This is the overall performance, and this is from 2020. I started from 2018. The testing data, so the in sample until I think end of 2024, like here, and then yeah, probably here, and then the out of sample sets, the auto sample data were from, let's say, end of 2024 till now. And this strategy performed very well even without the testing on those data. That happened because, as I told you before, all of the parameters I'm using are very flexible, and that's the thing I was looking for. So of course it showed me exactly what I wanted to see. So another great matrix is the recovery factor. That's the net profit compared to the max equity drawdown. And also this is very good. Of course now you see a big number, but because it's backtested on open, high, low, close 1 minute and is not on real ticks data, but I did it on the real ticks data, and I think is around 14 or 15 the recovery factor. So that's still very good. Okay, so now I'm going to show you the full strategy and how it's working. Those are the logics. You're not going to understand much because I'm not showing you all of the condition on how is entering the position and etc. etc. But you're going to see how it works. First is applying only position sell stop or buy stop, because I noticed that it was doing much better. And then you just saw that the stop loss moved following the price because I'm using a ATR-based trailing stop. The stop loss seems very big, but just because the price here did an insane movement, so the stop loss is based on the ATR. And in this case, maybe you can think that it's going to be too much, but after 7 years of data, I saw from the optimization tests that was the best thing to do. And also you saw that the order here expired after some hours, because that was also another condition. I don't want buy stop, sell stop there forever. And you saw here that the stop loss was very small also. Now let's move it a little bit faster. So I think this was 2020. You can see here that in 2020, of course, with COVID, with the pandemic, we saw insane movement on gold, and this algo was able to catch most of the movement because, of course, it's based on volumes and with a trading stop, and the take profit is not that close. So I can take like good amount of profit. Here, for example, it took like a losing trade. But yeah, that's pretty much it. In the end, building a quantitative edge is not about guessing, it's about testing, validation, and refining. Every phase brings you closer to understanding how and why your strategy works. If you enjoyed this process and this breakdown, make sure to subscribe. If you are interested in algorithmic trading, you can ask me any question. I will be very happy to respond to you. And also leave a like.